Hello and welcome to Pro Trader Strategies Market Commentary for Wednesday, December the 13th, FOMC Day. My name's Eric Wilkinson. Some of you may recognize me as the Wolfman from CNBC, Fox Business, or even the Wall Street Journal for my commentary on everything from economic to geopolitical and market analysis. Please keep in mind that everything that we talk about in these market commentaries is not a solicitation to buy or sell any of these securities or strategies. At the end of the day, we're here to teach you some different strategies that you can implement into your portfolios, but please do that in your own way. The reason why I can't give you a recommendation on a particular stock or strategy is because I don't know your risk parameters. I don't know what's in your portfolios, and therefore what I'm doing could be counterintuitive to what you are already doing. And please remember that past performance of any trading system or methodology is not necessarily indicative of future results. Having all that out of the way, let's get this on. A little bit of economic data across the pond. We've got sorry, I lost my place there. We got German CPI, final CPI month over month. It's not their flash numbers, but came in at 0.3%, expected to be 0.3%. Then here in the United States, more importantly, of course, is our own CPI, came in at 0.4%, where the core CPI, which strips out some of the ancillary products that can make that a little bit more volatile, it came in at 0.1%, expected to be 0.2%. And a lot of that has to do with the retail because what we're stripping out is goods and services that are purchased by the consumers, like except for food and energy. So that's going to give us a good representation of the cost of goods that are outside of that, like retail. And retail has been suffering quite dramatically. As a matter of fact, some of those numbers were coming in the lowest levels we've seen since 1998. So that number not really coming in very good. And then we also had our crude oil inventories. Believe it or not, even though crude oil is down on the day, it came in at a drawdown of 5.1 million barrels, expected to be a drawdown of 3.6 million barrels. So much bigger drawdown than what we were expecting. That may have caught the longs off guard, and it was an opportunity to cut or take some profits, if you will. But the market is down despite the fact that we're seeing a bigger than expected drawdown, which would intuitively make one think that we're going to move higher on that. Today, pullback, maybe some profit taking going on, having that opportunity of selling to those new buyers that are coming into the market. The overall trend, as I can see it, for the economic picture is doing very well, which is going to cause more drawdowns in crude oil inventories as manufacturers, consumers start using that product. Manufacturers are going to use the distillates and things of that nature, create plastics with that oil, consumers buying gas. That being said, crude oil might be the only thing that is down on the day at this point, but let's get on with it. As we saw, crude oil is down. We got gold futures slightly higher today, trying to test that 50 Fibonacci level that we've speaking so much about. It is going to act as a support resistance, unlike this 61 fib level that we were talking about before, where it was more of a magnet because it lined up with the point of control, which is where the most time and volume has been spent. Now this is going to act as support resistance, and we may look to see this come off a little bit and target that 1221 area, which is what I've kind of expected now that we've reached my 1250 level. I think it's going to continue on down, especially as Bitcoin futures really starts to take hold and everybody and their brother is taking out loans ridiculously and selling all their assets in order to just buy Bitcoin. Now, I'm not going to be trading Bitcoin necessarily right away anyway, but I want you guys to all be very clear of the concept that even when I'm talking about these type of assets, I say don't allocate any more than 5 to 10% of your portfolio value in any one stock. I don't care how sure you are that that market is going to go up. That you have the probabilities of it going against you. Bitcoin is a super hockey stick. Everybody's diving in there, and I'm kind of waiting for the shoe to drop. I'm a contrarian by nature, so yeah, this could go up and double, and I might miss out on that opportunity. But at the end of the day, to me, this has gotten a little ridiculous to the upside. So I'm not going to play on it. I don't hold it against anybody who is trading it. But one thing I would very much try to convey to anybody investing in Bitcoin: do not put your life savings in this product. I mean, allocate what you can afford to lose completely, and that's goes for just about any product. You know, anything you're going out there and buying in your trading. You need to be aware of the fact that you can lose money and lose all of that money. So trade with what you can afford to lose, in a sense. And for one, that will keep you peace of mind. That will keep you in the game longer. That will keep you mechanical, and you will be a much better trader for the long term if you don't fall into that trap of getting over invested too much in one particular asset. All right. So that's my soapbox, and I hope that you guys follow that through and through. As you guys notice, I don't. I mean, I try to spread it out completely, even if it's on different sectors of the overall economy. Just like with that Visa, you know, if I saw Visa go against me, I didn't jump and just dollar cost average necessarily with Visa, which I could have, and it would have turned out okay. But I went over into the MasterCard side of it and tried to split that up. I thought both of those had been oversold, but at the end of the day, I wanted to take advantage of if one of them started outpacing the other and not have that much risk all in one. All right. So gold giving a little bit of a bounce. Bonds even moving higher today, despite the fact that, as I mentioned, today is the FOMC meeting, and they're expected to come out with those results right around 2 o'clock Eastern. Expected to be a 25 basis point move higher. Anything more than that, I would expect the equities to really start, falling on their face. Bonds would also tank, or should anyway, unless the people started pricing in the fact that maybe they've overdone it, but I don't think that they have at this point. I think that they're going to be a 25 basis point move. So go from Fed funds at 1.25 to right around 1.5. So quarter basis point move higher. Quarter basis point move higher. All right. This is the chart of Bitcoin. Just want to throw this out there because it is in the news quite often right now, and everybody's kind of looking at Bitcoin. I'm just going to check what the cash is on Bitcoin for that, and it's trading right around 16,972, let's call it. So 16,972. So this is actually coming very close to where we were talking about. It was trading about $1,000 over. That was the spread on that. Looks like Bitcoin futures are starting to price in and come into line with where it's trading as the cash. And now a lot of times what we look at for that, this is a future. So this is the expected value of Bitcoin in at the end of January. So we've got another month to go for that. When we get closer to expiration, we would expect that to come in line in a little bit closer because the future has less time. Then they come back into parity. But right now, this is definitely outpacing to the downside and trying to catch up with that price. We could see this go into backwardation where the market is expecting Bitcoin to be lower in January. Before, when it was $1,000 over, it was expecting to be much higher. So that is going to be very interesting to keep an eye on right now because they are very close to, within $40 of parity. All right, VIX moving slightly higher right now, up by a penny, which is a little bit odd with the overall equities higher, but that may be due, in fact, to people putting on some protection, buying puts, and that's where we usually see the VIX start to spike, and people could be seeing that equities across the board are creating all-time highs, but we also have this binary event going on today, which is the FOMC. So that could be where people are putting on their protection in case the Fed does something a little bit wanky. But as you can see, the Dow Jones Industrial Average up well over 100 points and creating a new all-time historical high today. The NASDAQ and the E-mini S&Ps, that Dow chart that I showed you doesn't show the overnight trading, but the the NASDAQ and the S&Ps have printed a new all-time high intraday, and this happened for the NASDAQ literally off the open in the first 30 minutes. We printed that 64.3775 intraday. So that being said, we do have a new all-time high in there. It looks like the markets are kind of taking a bit of breather now, starting to slow down, kind of awaiting that FOMC, people kind of hedging up their positions, making sure they don't have anything too crazy on for that meeting in case anything wanky happens, because they could raise it a little bit more than that. I would hope they wouldn't do that right in a Christmas holiday season. I don't like it when they raise rates during that because it doesn't make sense to me to crimp spending going into that holiday season. But this FOMC doesn't have any qualms about raising rates around Christmas, as they've done it like the last 2 or 3 years now. So, but before that, with Greenspan, Bernanke, those guys kind of held off on that because they could see that it could really harm the holiday spirit, if you will. And again, this intraday high of 26.75.5 printed during the day, up only a couple of points right now as we speak here. People giving up, taking some profits. As you can see, the overnight trend moving higher off the open, printing those new highs. Now it looks like we're seeing some profit taking going on heading into this meeting, trying to hedge up some positions as we go forward here. All right, and then on to what I've done. Now, I talked about this yesterday. I had this trade on yesterday with the Intel. And Intel, I put on a Christmas tree. And the Christmas tree is supposed to pretty much kind of nail that number. It's basically a 1/3/2. So you're basically combining one long call spread with 2 short put spreads. And in that, I originally went in this trade and did the December, bought the 46 puts, sold the 44 puts, and then bought the 43 puts. So the way we figure out our max profit on that is take the wider put spread, which was $2 wide, subtract what I paid for that strategy, which was 40 cents in there. And then, so that means $2 wide, paid 40 cents. My max profit is $1.80. Now, I usually look to take somewhere between 25 and 50% of my max profit on that. And because this was in the December contract, there's only a couple of days to go. You know, I could hold it out, but I don't want to risk that. There's a lot more gamma risk going on, and it was very close to that 44 strike yesterday. We rallied up to almost 44 when I got filled. I probably got filled about 30 minutes to go in the day. I just had that order working, and I got out of that Christmas tree at 84 cents. So that being said, that's right in line with 25% of max profit, which is 25% of that $1.60. 40 cents added into that 40 cents I paid. So right around 84 cents is where I got out. So did that both in my IRA and in my margin account. So out of both of those, still have on the Apple trade, which is a butterfly, or the Christmas tree, which is in the butterfly family, in my margin account. It's actually finally gotten into positive territory today with Apple being up nicely. And, it's not nearly to that 25% of max profit that I usually look for on one of these Christmas tree. I needed to get up to closer to 80. I thought we'd go up and test some new all-time highs. The 80 strike is where I'm short. Long the 70 calls, short the 80 calls, and then long the 85 calls. And of course, being a floor trader, I always drop that one. So just so you know, that's the 180, or the 170, 180, 185 call Christmas tree. So need that to really move up in the next 2 days. Otherwise, it's not going to be very much of a profit at all. It'll probably be a scratch after all my commissions on that, because it's a very commission intensive type of strategy. All right, so that's about all I've got for today. Friday's webinar is going to be on long puts. I know I've been talking about that, it seems like, for 2 weeks now, because last week we did the covered calls, which is probably working out quite nicely for a lot of people. But this week we're going to be doing it on the long puts. I'm going to be breaking it down into very small segments so that even the so that the newer investor of options or trader of options will understand options enough to feel comfortable kind of getting their feet wet. But I'm also going to throw in some things in there that even a veteran trader will be able to take something away from that and maybe increase their probabilities of success. Will most likely increase their probabilities of success if you play it by my rules. All right, so that's about all I got for you guys today. Check that out. If you can't take that, take it easy.